All right, so let's talk about how Trump's tariff policies have impacted cryptocurrency and the entire stock market. And this is kind of like the basket of risk on assets, right? Risk on assets. How do tariff policies impact the actual price? And we're going to look into detail because after doing deep research, I've realized that even back in 2018 and Trump's first term, he actually inputted, tariffs on China specifically. So we have a really good piece of clean data to look at and see how it affected price, and that's what we're going to be talking about in this video. But first off, I want to apologize for like how I've talked in the past. Like, I feel like I haven't been completely unbiased, right? And sometimes even me, like, I'm a human, I get too much of me involved in the research. So what I want to do today is be completely transparent and unbiased without putting my opinion in it at all. What I decide to do with my money should be separate from the way that I display my research. That's deep. And so even me as a trader, I'm getting better and better. And so if you feel like, you've been too involved emotionally in the market, it's okay. Take a step back, reflect, and let's look at this together without bias. And that's what I want to plan on doing today. So let's jump into the actual market. First things first, I do have to throw this out there. Before we go into tariffs, this is a death cross. So a death cross is pretty significant. Now, I'm not going to go into too much detail. I've made previous videos about this, but the death cross is happening, okay? And this is where the 50-day moving average, this yellow line here, crosses the 200-day moving average. And from a technical analysis perspective, this is typically not that good, but also, in my personal opinion, not as important as the tariff policies. So just to give you a background, Trump has been pretty aggressive and vocal about tariffs. So he's implementing all different types of tariffs with different countries. And essentially, there's threats from other countries, threats from Trump, back and forth. And people are calling this the trade war. It's basically a war, right? A big war of back and forth when it comes to the fee that is essentially put on goods and services that come into our country. So, for example, if let's say hypothetically a microwave is built in China and it comes into America, and let's say hypothetically it costs, I don't know, $100. That's an expensive microwave, but let's say it costs $100. Trump right now has a 125% tariff, meaning the China has to pay 125% of the cost. So that means that China would have to pay $125 to import a $100 microwave. Now, it's not aggressive for everybody. There's a universal 10% tariff. And so in that case, the person would only have to pay $10 to import something into the United States. Now, obviously, he's been focusing on China. We see that very clearly, okay? But he does have a whole bunch of different implementations in different countries, and he has done it in the past. So what I did is something I call timeline price analysis. So timeline price analysis is basically looking at through the history of any asset, and you're kind of looking at the timeline of events that affected price. Now, so if we go back to 2018 and we look right here specifically, right? Let's kind of take a look right here. You can see that actually Trump implemented tariffs, hit about $34 billion worth of Chinese industrial and tech goods right here, okay? They've done this in the past. Then in September 24th, 2018, he expanded to more consumer and industrial Chinese imports. So he's been targeting China for a long time, right? Now, the interesting part about this is this did lead to a short-term crash. So and this is the S&P 500. The reason why we look at the S&P 500 opposed to looking at crypto is because it's pretty much the same thing when it comes to risk on assets. They're both risk on assets. Just in crypto, it's a little bit more exacerbated. Meaning, if you see a drop in the S&P 500 like 10%, you'll probably see like a 20% drop of Bitcoin and then maybe like a 40% drop of altcoins. So they're pretty much identical when it comes to direction, right, and trend. So I like to look at the S&P 500 because there's so much more liquidity. There's so much more. I mean, when I mean so much more, I mean like 100 times more depth in the S&P 500 than crypto itself. So this gives us like an ultimate indicator. I like to look at the biggest indicators, right? So again, we look at these tariff policies that Trump put into play in 2018. And believe it or not, they actually led to an economic collapse. So as you can see right here, we have a 20% drop right here in the S&P 500. And interesting. I'm not going to get into conspiracy theories, but a little bit while after, we have the first known COVID-19 case, and we all know that came from what? Came from what? It came from China. Interesting. Interesting. It's very interesting that we have these very specific tariff policies by Trump against China, right? This is like an economic war. And then we have, I'm not going to go into detail about it, and I'm not here to sit there and speculate, but I do think it's interesting that we have the first COVID-19 case that comes from China. Now, if you remember that period of time, if you were involved with the markets, there was a big problem in the supply chain. There was a big toilet paper crisis, and people couldn't get toilet paper, and the cost of toilet paper went crazy. And there was all this, like, we couldn't get goods, and it was all backed up, and people were freaking out, and people were hoarding items and all this crazy stuff because of COVID. So now I think that's interesting because it directly relates to what we're experiencing right now with the trade war. It's very similar, right? It's some type of cause and effect to the trade of the United States, right? And so I just thought that was interesting. Now, the actual dump, and this is why I always talk about perception versus kind of the utility of what's actually happening. Just because COVID-19 happened, that didn't actually cause the dump in the market. What happened is we had a spike in interest around COVID-19. So there was like the actual event, and then everybody started realizing that this is real. There was a massive spike in Google Trends, and this perception of fear is what caused the COVID-19 crash. It's usually fear-based from the public. From what I've noticed, it's fear-based from the public. So I don't know, you guys tell me. Right? You guys tell me. Just be honest in the comment section below, unbiasedly. Do you believe that these tariffs from China that, Trump has did to China had something to do with these two crashes? Personally, I do believe yes. I do believe that tariffs that were imposed and specifically targeted China, which is the second biggest importer in America, right? There's three, which is, we all know, hopefully you know the three: Mexico, Canada, and China. Not in that exact order, but they have the most imports that America gets, meaning the things that we like literally use in our economy come from those three places. And Trump is targeting those three places. And so let's look at an updated version of the tariffs. So if we look at the updated version of the tariffs and we look at what's going on now. So as soon as Trump comes into office on January 20th with the inauguration date, like right here, I mean, the S&P 500 is not really doing too well. It's not doing too good. Even though there's a lot of positive news, we know that he's the business president, right? He's supposed to make us all money, make this country prosperous. Maybe these tariffs actually do that. And I'm not going to go into detail about that, right? I'm not going to pick a political side. I'm a trader, right? So as a trader, okay, it's different from the perceptions of this is actually going to help the economy or not. Long term, this could very likely, and I do believe it will, help the economy substantially. But just like anything, like even when you lift weights, or even if you want a force to get bigger, there's always some type of pain. You have to rip your muscles and you have to burn the force down for it to grow bigger. There's always short-term pain, right? And that's literally what's been happening. So on February 1st, he announced 25% tariffs on Canada and Mexico. Oh, snap. Those are the two biggest importers into America, and 10% on China. He wasn't as aggressive. And then on March 4th, that's actually when it took effect, but the news was here. Then March 12th, he imposed 25% tariffs on all steel and aluminum, right? Interesting. Then on April 2nd, he declared a 10% universal, for 57 nations. And this caused the market to drop substantially, as you can see right there. Big drop. And as you guys know, if you've been keeping up, that's actually when I sold majority of my crypto over here, I believe. No, I sold it. I forgot exactly. It was like way over here, actually. I sold like over here. And then I sold the last half year, or the last 7%. I was out of the market for a while now. And right here, specifically, when the market dropped, it tanked right here. It was like devastating. It bounced back up immediately after the news was that Trump was going to extend the negotiations on the reciprocal tariffs. So the story pretty much goes, Trump was like, oh, I'm going to put reciprocal tariffs. Reciprocal tariffs basically means he's going to match whatever tariffs that country is imposing on us. So for example, let's say Joe Schmo company is imposing a 25% tariff on us, meaning if we want to send something to them, we have to pay 25%. Reciprocal tariffs means we're just going to match it, right? So he came out with the news that he's about to impose reciprocal tariffs, right? But then the market tanked. Tanked meaning it dropped. It dropped substantially. Everybody's freaking out, right? And so when it tanked, Trump's like, okay, so this is a little bit too much. Let's extend the negotiations for 90 days. And that's what happened right here. This is why you see this big candlestick. There's a massive candlestick because Trump's like, let's extend the negotiations, but we're going to tear up China. We're going to tear up China with the 125. So China is at 125 right now, and everybody else is at 10%. I think Canada is at 25%, and Mexico is still at 25%, right? So he hit the big three, aggressive, and everybody else gets the 10% universal tax. And this was 145. He actually dropped it to 125. So right now, it's still pretty aggressive. Even though he pulled back a little bit, and he's obviously negotiating, it is really aggressive. Now, the interesting thing about this is that it's substantially less aggressive than what we saw here. Let me say it again. What he's doing now is probably a magnitude of 3 to 5 times worse than what he did back here. And this could have led to this COVID crash. It could have led to it. Look, I don't know. This is all like speculation and theory. It is not fact. But from everything I've experienced after studying interest rate policy, we've had multiple videos on this. Interest rates like literally called COVID. There's a lot of signals economically that happened before COVID actually happened. Now, some people say that this virus was manufactured, right? Some people say it was natural. I don't know. But what I do know is that there was specifically an economic warfare happening. And then the warfare economically turned into another dimension of, this virus, potentially chemical warfare, right? This is a thing, right? Because right now, if you just kind of play it out, I don't think anybody wants to start a nuclear war, right? We don't want to go to World War III. So they're kind of stressing every other option. Could it have turned into a chemical warfare? I don't know. I don't know, okay? But what I do know is that something poked the bear. Something happened. Something happened over here, and they seem very correlated, I believe. They do. And I don't know. I don't know. But what I do know is that this 20% decline that we see right here, these policies were significantly less than what we're experiencing now. COVID or not. This is a magnitude of 3 times worse, probably more than that. I mean, 125% tariffs on China is absurd. Like, if you really think about that, right? I don't think we've ever seen anything like that in the history of ever, in all American history, where somebody has imposed 125% tariffs on China. We've had significantly less tariff policies. I'm going to say it one more time. Significantly less that has led to catastrophic downturn. This was pretty big. This is pretty big as well. So, until we have clarity and negotiations settle, my personal perspective, I don't know, I want to hear your personal perspective. Leave it in the comment section below. I believe this can't be good for risk-on assets in the short term. In the short term, like right now, this cannot, it just doesn't make, sense data-wise. Like when it comes to data, it doesn't make sense. Now, everybody has their own perspective. Everybody has their own strategy. Everyone likes to trade their own way. That's up to you. But data-wise, I cannot say with a straight face any of this makes sense to hold an asset, a risk-on asset. Risk-on assets, by definition, are assets that are risky, and people buy it when they have increased risk appetite. So when it's very uncertain, we don't know what's going on. We don't know if there's going to be a whole nother, situation where toilet paper skyrockets in price. We don't know. Like even Amazon themselves are having issues, right? And we actually have another video coming on that. But essentially, like these companies, Amazon, I want you to think, or not Amazon, Walmart. Walmart's having issues, but Amazon could be having issues as well. Amazon, Walmart, all these big companies that rely on imports from China, you got to ask yourself that question. If China is the second biggest importer into America, and Trump basically said, you can't do it no more, you're done. That has a massive, it's going to have a massive impact on all of the companies involved, on China, on America, all the employees involved. It has to have massive impact. Now, the thing is, we don't know what that impact is. And this is, by definition, uncertainty. This is uncertainty. We don't know what Trump's going to do. No one knows. No one knows. And this uncertainty is opposite of risk appetite. And I think that's very clear. Nobody wants to take risk right now because Trump he's basically going out the Wild Wild West shooting at the hip. We don't know what he's going to do, right? And so that's why I believe conservative investors are taking a step away. And I even think risky investors are like, okay, this is crazy. Like I'm considered a very risky investor, or not investor, but position trader. Position traders trade over a longer time horizon where I'm not an investor. I don't hold indefinitely. Investors typically hold for like 10 years. I don't do that. I hold for approximately 2 to 3 years. And my goal is to buy low and sell high based off of the credit cycles and the Bitcoin halving cycles. So I would consider myself a high risk position trader, and I ain't touching it. It's not wise. It's pretty foolish based off of this one piece of data. So looking into this one piece of data, which is tariffs, which I think is the most significant piece of data right now, I believe it is short-term bearish. Now, there's other things to take into consideration, and we'll be, looking into that in future videos, but I wanted to update you guys. Thank you guys for watching this. I'll catch you guys later. Peace out.